Buy before the SpaceX IPO arrives, not after, before. Because here is what history tells us every single time. When the biggest IPO in the history of financial markets goes public, the stocks that made you rich were not the IPO itself. They were the suppliers, the infrastructure companies, the ecosystem players that nobody was watching while everyone was fighting over the main event. SpaceX confidentially filed its S-1 on April 1, 2026. Analysts are now targeting a June 2026 listing at a valuation between $1.75 trillion and $2 trillion. That would dwarf Saudi Aramco's record $29.4 billion raise, and Morgan Stanley just released a list of 60 public companies across the full space supply chain that stand to capitalize. I went through all 60. I found the 6 that matter most, and one of them is so undervalued relative to its peers that it looks like a mistake the market has not corrected yet. Stay with me, because this is the research that changes how you see the entire space sector. Here is what we are covering: why the SpaceX IPO creates a two-stage opportunity, and why most investors will only capture the first stage and miss the second. The 6 stocks already running on SpaceX momentum with real revenue and real backlogs behind each of them. And the one stock trading at 5.5 times revenue while its closest competitor trades at 75 times. Let's get into it. First, let me give you the framework that most investors are missing entirely. There are 2 types of value being created by the SpaceX IPO: story value and fundamental value. And understanding the difference between them is what separates the investors who make money from the ones who get trapped. Story value is what happens right now. SpaceX goes public at $2 trillion. Every fund manager, every analyst, every retail investor asks the same question: what else can I own that benefits from this? They are not running discounted cash flow models. They are looking for proximity to the story, and anything close to the SpaceX narrative gets bid up. Suppliers, competitors, adjacent technology plays, even unrelated satellite stocks. Fundamental value is what survives after the story fades, after the IPO euphoria peaks, after the institutions that rode the narrative start taking their profits. The stocks with real revenue, real backlogs, and real technology will hold and eventually move higher. The stocks that rode the story without the fundamentals will crash back to where they started. The investors who win in this environment own both. They capture the story value now while making sure the fundamental value is underneath them when the story fades. Every stock I'm about to show you has both. Stock number 1. Rocket Lab, ticker RKLB, current price around $110. Most investors know Rocket Lab. What most investors do not know is what just happened last week that makes this the most fundamentally grounded pure-play space stock on the market. Rocket Lab just posted Q1 2026 record revenue of $200 million, up 63.5% year-over-year, beating consensus by 6%. Non-GAAP gross margin expanded to 43% from 33% a year ago. And the backlog surged to $2.2 billion on 31 new Electron contracts, plus 5 dedicated Neutron missions signed in a single quarter. That is not a story stock-riding IPO hype. That is a real business with real revenue growing at real speed. And here is the strategic position that makes Rocket Lab uniquely valuable as SpaceX approaches its IPO. If Neutron flies successfully in 2026, Rocket Lab becomes the only Western alternative to SpaceX for medium-lift payloads. Every satellite constellation that does not want to depend entirely on SpaceX needs Rocket Lab. That is not a niche market. That is every government on Earth that has national security concerns about depending on a single private American company for launch access. Here is my honest concern. Rocket Lab recently experienced a Stage 1 tank rupture during a qualification test for Neutron. A failed maiden launch would compress the multiple fast. and the stock has already run dramatically, making the easy money harder to capture now. My takeaway: 200 million in quarterly revenue, 2.2 billion backlog, the only Western SpaceX alternative for medium lift. On every pullback, this is the highest quality, pure-play space stock to own. Stock number 2, AST SpaceMobile, ticker ASTS. Current price around $75. Most investors look at AST SpaceMobile and see a satellite company. They are completely missing the revolutionary nature of what this company is actually building. Here is the reframe. AST SpaceMobile is not building a satellite internet service. It is building the first space-based cellular network that connects standard, unmodified smartphones directly from orbit. Your normal phone. No special hardware, no satellite dish. Just your existing device connecting directly to a satellite above you. AT&T, Verizon, Vodafone, Orange and TELUS have all signed partnership agreements. The FCC granted commercial, direct-to-device authorization in April 2026, covering up to 248 satellites on 700 and 800 MHz spectrum. And the company has over $1.2 billion in contracted revenue. Here is the number that tells the real story. Revenue went from $4.4 million in 2024 to $20.9 million in 2025, a 1,500% increase, and management is guiding $150 to $200 million for 2026. Here is my honest concern. A Bluebird satellite launched on Blue Origin's New Glenn in April 2026 reached an inadequate orbit and had to be deorbited. Every delay in the Bluebird cadence pushes revenue to the right. This is a high-conviction, high-risk position that requires careful position sizing. My takeaway: the technology works, the regulatory approvals are real, the telecom partnerships are signed. The question is execution speed. Own a position sized for the risk and add on successful launches. Stock number 3, Planet Labs, ticker PL, current price around $8. Planet Labs is quietly one of the best-performing space stocks of 2026, up 97% year-to-date, and the fundamental story behind that performance is stronger than most investors realize. Here is what Planet Labs actually does. They operate the largest fleet of Earth imaging satellites in the world. They scan the entire planet every single day. And they sell that daily global imagery as a subscription service through their Aleph Observer platform. The numbers are exceptional. Fiscal 2026 revenue hit $307.7 million, up 26% year-over-year. Backlog jumped 79% to $900 million, and 98% of their revenue is recurring annual contract value. That is software-like revenue predictability from a hardware business. And here is the defense angle that is driving the most recent acceleration. Governments that need to monitor military activity, track supply chains, or assess infrastructure damage need daily global imagery. Planet Labs is the only company that delivers it at that frequency and at that scale. Here is my honest concern. Planet Labs is still not profitable on a GAAP basis, despite the revenue growth. The path to profitability requires continued scaling without proportional cost increases. My takeaway: 97% year-to-date returns, with a 98% recurring revenue base and the $900 million backlog. The defense demand tailwind is real and growing. This is a hold and add-on pullbacks. Drop a comment right now. Did you know Planet Labs scans the entire planet every single day? Because most investors have no idea this technology exists. Let's keep going. Stock number 4. Intuitive Machines, ticker LUNR, current price around $20. Most investors look at Intuitive Machines and see a small lunar lander company dependent on NASA contracts. They are missing the scale of what just happened. Management guided 2026 revenue between $900 million and $1 billion. That is approximately 5 times the trailing 12-month figure of $210 million. If they deliver near guidance, this stock is dramatically mispriced at current levels. Here is what Intuitive Machines actually does. They build lunar landers and surface delivery systems for NASA's Artemis program. They literally land hardware on the moon. And they do it on SpaceX rockets. Every Intuitive Machines mission rides a Falcon 9 to lunar orbit, making them a direct SpaceX ecosystem participant. The backlog, approaching $943 million from NASA's commercial lunar payload services contracts and defense awards, validates the revenue guidance. And positive adjusted EBITDA guidance for 2026 would make them one of the first commercial space companies to reach that milestone. Here is my honest concern. Lunar missions slip. The guidance requires successful mission execution in an environment where delays are common and expensive. Wait for IM-3 mission success before sizing up significantly. My takeaway: 5 times revenue guidance, NASA backlog validation, SpaceX ecosystem participant. If lunar missions execute, this stock is mispriced. Size for the risk and add-on successful mission confirmations. Stock number 5, Filtronic, ticker LTCF on the OTC market. Current price around $4. This is the one most American investors have never heard of, and it might be the most direct SpaceX supply chain play available in the public markets. Here is what Filtronic does. They make the high-power E-band amplifiers that Starlink ground stations need to function. Without Filtronic's gallium nitride chips, Starlink does not work the way it is supposed to, and SpaceX has literally filled their entire factory with orders. And here is the detail that makes this extraordinary. SpaceX holds warrants for up to 15% of Filtronic's share capital, with roughly 10% already vested. SpaceX is essentially a 10% shareholder in Filtronic. In August 2025, they signed their largest ever contract, a £47.3 million deal with SpaceX for next-generation G and N-band products. First production units ship in fiscal 2027. Here is my honest concern. Filtronic trades on the London Stock Exchange and the OTC market, which creates liquidity constraints for most American retail investors. And the revenue from the major SpaceX contract does not hit until 2027. My takeaway: SpaceX as a 10% shareholder in your company, SpaceX filling your entire factory with orders, and a direct supply chain position in the infrastructure that makes Starlink function. At $4 on the OTC market, this is one of the most asymmetric SpaceX supply chain plays available. Now let me show you the stock that has all of the same pieces but has not re-rated at all yet. Stock number 6, Redwire, ticker RDW. Here is the comparison that should stop every space investor cold. Rocket Lab trades at approximately 75 times trailing revenue. Planet Labs trades at 43 times. AST Space Mobile at over 300 times. Intuitive Machines at 14 times. Redwire trades at approximately 5.5 times trailing revenue. That is not because Redwire's business is worse. In many ways, it is better, and the disconnect between its valuation and its peers is one of the clearest mispricings I have seen in the space sector right now. Here is what Redwire actually does. They build the hardware that makes space missions possible. Solar arrays, deployable structures, star trackers, antennas, radiation-hardened processors, critical components used on NASA missions, SpaceX Dragon cargo flights, and defense contracts. And here are the numbers that prove this is a real business being completely ignored by the market. Q1 2026 revenue hit $97 million, up 57.9% year over year. Record backlog of $498 million with a 1.92 book-to-bill ratio. And 2026 revenue guidance reaffirmed at $450 to $500 million. Here is the SpaceX connection that makes this particularly interesting. Redwire's ROSA rollout solar array technology has flown on multiple SpaceX Dragon cargo missions to the International Space Station. The iROSA wings powering a significant portion of the ISS today were rolled up inside SpaceX Dragon trunks and lifted to orbit on Falcon 9 rockets. Redwire literally helps power SpaceX missions. And then there is the Andromeda IDIQ contract, a $1.8 billion indefinite delivery, indefinite quantity vehicle that gives Redwire pathways to a massive volume of defense and space infrastructure work. Here is my honest concern. Redwire has faced insider selling pressure and a recent Zacks downgrade to strong sell. These are real signals worth monitoring, and the reason the stock has not re-rated may be partly structural concerns about margins and debt that require watching. My takeaway: 5.5 times revenue, 57.9% quarterly revenue growth, $498 million record backlog, direct documented SpaceX supply chain exposure, $1.8 billion defense contract vehicle, and a valuation that is a fraction of every comparable company in the sector. When the SpaceX IPO drops and every analyst starts publishing space supply chain reports, it will be very hard to explain why Redwire is at 5 times revenue while everything else is at 40 to 75 times. That gap will close. The question is whether you are positioned before it does. Let me bring this all together. 6 stocks, 6 different positions in the space supply chain, all 6 with real revenue, real backlogs, and real reasons to own them before the SpaceX IPO. If I had to rank all 6 for new money today, here is exactly how I see it. Number 1 is Redwire, the most undervalued stock in the space sector at 5 times revenue with 58% quarterly revenue growth and direct SpaceX supply chain exposure. Number 2 is Rocket Lab, the highest quality pure-play space stock with $200 million in quarterly revenue and the only Western SpaceX alternative for medium lift. Number 3 is Planet Labs, 97% year-to-date with 98% recurring revenue and $900 million in backlog. Number 4 is Filtronic, SpaceX as a 10% shareholder and your entire factory filled with SpaceX orders. Number 5 is Intuitive Machines. 5 times revenue guidance and NASA validation, but wait for IM-3 mission success before sizing up. Number 6 is AST Space Mobile. Revolutionary technology with real regulatory wins, but execution risk after the April launch failure. Here is the investing truth I want to leave you with today. The SpaceX IPO is going to flood potentially trillions of dollars into the space sector. The anticipatory run is happening right now. The post-IPO rotation and consolidation will happen after. And the long-term fundamental values will ultimately determine who wins and who gives everything back. The investors who capture both stages understand the difference between story value and fundamental value. They are positioned in the stocks that have both, not just the ones riding the narrative. You now understand the full SpaceX supply chain trade. Before the June IPO, before the flood of capital arrives, before the 60 Morgan Stanley analyst reports get published. Use that knowledge. Disagree with my rankings? Tell me in the comments. Which of these 6 stocks are you buying before the SpaceX IPO? Which one do you think I have wrong? Subscribe for weekly research on the real opportunities behind the biggest stories in the market. No sponsors, no fluff, just the analysis. See you in the next one.